Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Fisker Automotive, ticker symbol FSR. And so I am recording this after the market has closed on Wednesday, March 13th. And it did close on the day at a price of about 32 cents, being up about 3.5% on the day. But I'm sure, as you all know, price took quite a dip in the after hours, going down nearly 50%, going down from 32 cents down to 17.23 cents. So looking pretty bad. And that is following the news that Fisker is preparing for the possibility of bankruptcy filing. And so with that being said, I do think that this has gotten to be a pretty risky play. And I do think that any amount of money put into Fisker at this point, or put into Fisker in the past, I think that we have to recognize the reality that it is quite possible that those positions may go to zero if Fisker does file for bankruptcy, and it's quite possible the shares could become worthless eventually. So I do think it is good to be, thinking about that moving forward, that any money put into the company could completely be vaporized. So, not the best of news, but I do think that is reality. And, while I was at work today thinking about putting this video together, I thought it'd be good to look up, what happened with Bed Bath & Beyond, ticker symbol BBBY, because they filed for bankruptcy. And I thought it'd be interesting to see what the chart looked like, if there were any squeezes around that, because I had thought that there were. But it was very difficult for me to find information on BBBY. And you can't find the ticker anymore. So, that money has been vaporized, and that could very well happen with Fisker. So I do think it is very, very risky. And but I do think also that, there might be some levels that it arrived at that could potentially act as support, but it could also just, be the formation of a bear flag and it drops even lower. So, like I said, very, very risky. Do proceed with caution, whatever you decide to do. I am not too familiar with this kind of thing, but I am familiar with, it not being worth holding a stock after a while. I had held Lordstown Motors, which was ticker symbol RIDE, and, I got rid of that at quite a loss, but it could have been much worse. So we might be dealing with something very similar to that now. But I do want to go over some levels based on basically the last video that I did, which I put out on Sunday. And so they are really based on these Fibonacci retracements. I can just do extensions from them, adding the next level down. But before I do that, I did want to point out this 1618 extension from this retracement here. I had pointed out in last Sunday's video that this could potentially be acting as support right around 26 cents. And so earlier today, I was thinking, wow, it looks like Fisker might be finding a bottom right around 29 cents. So 26 cents may not get hit. That's good. I'm thinking that the stock's going to go up. Also thinking about that deal that they were making with Nissan, thinking that that might get the stock to pop. But then in the after hours, we did see a drop, blew past 26 cents, going down, to 17 cents and lower. So that level did not act as support, but there are some levels, like I said, that may stand out as potential support based on current price following the after hours trading. And so I'm just going to do an extension from all of these retracements. So this one right here at 37 cents, that's the 2618. So I'm just going to add the 3618 to this. From the yellow retracement here, I got the 1618 on there right around 37 cents. And so I am going to add the 2618 to this extension of the retracement here. And then from this white one, I've got the 1618 on there. I am going to also add the 2618. All right, and so with those extensions added on there, we can now look at the after hours pricing to see if any of these levels acted as support. And so now I'm just going to adjust it to the 10-minute time scale here from the daily that we've been looking at. And so looking at that, pretty crazy, but also, makes me a little nervous. that the orange extension, the 3618, at a price of 15.61 cents, we did get a wick down to that level, hitting a low in the after hours of 15.05 cents, and we have consolidated above that level. So I do find that pretty remarkable. We also do see that within a 10-minute time span, actually, let's switch over to the 1-minute time scale. Looking at that, yeah, within less than a minute, we blew past that 1618 at a price of 25.90 cents. Within 1 minute, blew past that, kept going down. That's what you call a falling knife. And yeah, but it does look like we potentially found support right around 1561. And then also, I'm actually going to switch back to the 10-minute time scale just so it's not so there's a little bit more here. In my view, I like to look at the larger time scale candles. But so we do have this one big red candle dropping down 46% within the span of 10 minutes, coming down to that orange level at a price of 1561. We did not, though, blow past that to the yellow 2618 at a price of 13.17 cents. So, there is another level to the downside there. Also, if I do adjust the y-axis, we can see the 2618 from the white retracement. That extension level is at a price of 6.8 cents. So pretty far down there. So, hopefully price doesn't go that low, but it's quite possible that it will. If there are some squeezes following this bankruptcy rumor, the possibility and probably likelihood of that happening, we might see price drop further. And so if there were to be a squeeze around this news, maybe the Nissan news brings price up a little bit, but let's say price dips down to 6 or 7 cents before that news is released and it bounces up to 15, 16 cents. Is that worth it? To me, that seems a little too risky. And also looking at this trading, this after hours trading, we do see some consolidation above the orange line. And what stands out to me is it does look fairly flat on the bottom, whereas in the top, it does look like there is a slope to that consolidation that could potentially be the formation of a descending triangle, and descending triangles tend to break to the downside. Perhaps this is a bear flag. Big move down, consolidation over here. I do think that price could continue lower. So I feel like this is very risky. I think the risk is way greater at this point than the reward. But what am I doing? Just for myself, you got to do you. I'll share what I plan on doing. I have accumulated a fair number of shares, probably not that many, but more than I was anticipating getting initially. I was expecting that price would hang out around $1. And that I could sell covered calls with strikes at $1. And if it closed in the money, I'd take a little bit of profit, I'd get rid of my shares, and then I could buy back on a dip. But as you know, price bled. We are now much lower than $1. My average is around 60 cents. And so, I can't even be making money if I'm selling covered calls with a 50-cent strike. So, basically what I'm planning on doing, I have sold some covered calls at a $1 strike that expire in a couple weeks. And so what I'm going to do is I'm just going to hang tight for the next couple weeks, see what happens with the price. If it goes lower, so be it. If it goes higher, I'm locked into those covered calls until next Friday. And so I'm going to have to wait and I'm going to see what happens. But if I am in the green, or if a couple weeks from now I get those shares back, I might trim my position pretty heavily because I just don't think the risk is worth it. And if I can take, 1/5 or 1/8, I forget exactly, of my money back, that's better than taking zero back. So I think this has gotten pretty risky. And I feel like this is probably one to maybe distance oneself from. But, that's just, my risk tolerance. If you guys do enjoy these videos that I put out on Fisker, I can try to provide more perspective on it. But I do, at this point, think it's way too risky. And I do think that this has the high likelihood of going to zero. Even at 32 cents, even at 17 cents, even at 10 cents or 6 cents, those numbers are greater than zero. So, I think it's good to at least take some of the that risk off of the table. And so, for me, I'm going to wait a couple weeks before I do that, just because I'm locked into those covered calls. But I don't think it's going back to $1, unfortunately. And I do think that they will need to raise capital, and I think that they'll be doing that through investors. And really, when it comes down to it, you got to ask yourself. I ask myself this all the time. Am I in the stock holding business, or am I in the money making business? And so maybe I could diamond hand this, hold it for a long period of time. Maybe I make some money with it, but I feel like the odds are in the favor of me losing that money. And so I'd rather take that money that I do have and use it for something that I think is more likely to go up. I did just put out a video on Rumble, also featured in the DGen Education Wednesdays video. And I think that looks like it just formed an inverse head and shoulders and is breaking out. I think that has much more potential to make money than Fisker right now. But if funds are locked in Fisker, can't really do too much. So, I'm going to wait a couple weeks and then I'm going to reevaluate then. But that's just my plan, and it's probably different from yours. And you got to do what works for you. Whether that's taking some off the table, waiting a couple of weeks to see, or just forgetting about it. But I do think that perhaps a year from now, this could not be on the exchanges anymore. So definitely something to consider. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Sorry about the news here, but it is what it is. Take care, you guys.